Bitcoin's huge crash and the Coinbase outage. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to talk about the huge crash that occurred in Bitcoin last night and the outage that happened at one of the big exchanges, Coinbase. So let's have a look. We'll start by looking at the current Bitcoin price, everyone. And I know some people may want to avert their eyes. So it's sitting around 35,000, 36,000 at the moment at the time of recording. I remember I was watching it last night, seeing if it would break under the $30,000 limit. And it got down onto Binance where I was watching it. $30,004 was the lowest purchase price. So someone just sold at a very low level. So we can see it's obviously going right down. Is this the head and shoulders top that people are saying? Are we going to start seeing that? Is that forming here, everyone? And we have a look at some of the other cryptos. Bitcoin is not alone. Ethereum has fallen down to $2,200, down 43% in the last 7 days, faring much worse than Bitcoin. And unfortunately, means mining isn't going to be as affordable. You've got Binance Coin is down 50% in a week, everyone, down to $300. Cardano, who was the only one in the green a few days ago, or yesterday, the day before, is back down to $1.38. Doge is down 27% to 30 cents. I still think that's funny. It's like a sub 1 cent coin to me. That's how I'll always see it as. XRP is back under $1 at 94 cents, down 27% in the week, down 40% in the last 24 hours. Polkadot down 44% in the last 24 hours, down to $22. And then you've got Internet Computer, the new coin or token that just burst into the scene, just burst out of nowhere into the top 10, is down to $110, down 59% in the last week and 36% in the last 24 hours. So let's have a look at this article to see why they're talking about, what the media is saying about this big crash, everyone. Why is crypto down? Bitcoin, Ethereum, Dogecoin price crash explained. So they're going to explain it to us. The price of Bitcoin, Ethereum, and a range of other cryptocurrencies crashed badly overnight. So what has the market spooked? Well, honestly, I would suggest it's just simply crypto in many regards. It is a market that is very fickle, and you've got a whole lot of people investing, and probably a whole lot of people that have jumped in for the first time ever. So this might be their first experience of a crypto crash, or shall we say, a very violent correction. I mean, remember back in the day, guys, back when we had the correction in 2017, how far it went down. Things don't go up forever. I know everyone wants it to, but it doesn't go up forever. So Bitcoin plummeted over 30% overnight on Wednesday, sending the price of the biggest cryptocurrency below 50,000 Australian dollars per coin for the first time in over 3 months. I still think it's funny, going down to 50,000, down to 30,000 USD. Bitcoin's plunge comes amid a broader sell-off of cryptocurrencies that saw the overall market lose about 20% of its value, or $425 billion, in 24 hours, according to data from CoinMarketCap.com. As of noon, Bitcoin was trading at about 51,000 per coin, according to CoinMarketCap.com. That means the digital coin had lost all of its gains since February, around the time that Tesla announced it had bought $2 billion worth of Bitcoin, which helped spark a run-up in price that saw Bitcoin peak over 75,000 Australian per coin in April. Bitcoin is still up over 300% compared with a year ago. Other major cryptos posted staggering losses too. Well, it's probably because, honestly, every other crypto is kind of pegged to Bitcoin. They all follow Bitcoin. Sure, you may have a bit of a trimming of Bitcoin's value, and then that will flood into the alt market. But I mean, what we're seeing here is just nuts. Ether, the digital coin native to the Ethereum blockchain, fell about 20%. And Binance Coin fell almost 27%, according to CoinMarketCap. Doge was down 20%. So why crypto is down? A variety of bad news over the past week could have sparked the sell-off. This week, cryptos really seem to be in the firing line. They've been hit by tax returns, Elon Musk, who's hugely influential in the crypto space, major platform outages, and now a move in the asset class today that feels like capitulation, Anthony Denner, CEO of trading platform Webull, said. All of these things combined are likely to have rattled investors, causing them to sell. So last week, Tesla CEO Elon Musk said the electric car maker would no longer accept Bitcoin as payments for its cars, citing environmental concerns associated with mining of Bitcoin. Musk's comments wiped $388 billion off the cryptocurrency market that day. And earlier this week, Musk appeared to imply in a tweet that Tesla either had sold all of its Bitcoin holdings or planned to. Hours later, he clarified that Tesla had not sold any Bitcoin. Musk tweeted at 1 a.m. Australian Eastern Standard Time to indicate Tesla was standing firm despite the crash. So Tesla has diamond hands. I mean, it's a bit of a game for him, isn't it? The diamond hands emoji, also know your meme, what? Is a reference to traders who believe in the eventual profitability of their stocks and securities and keep holding them while their value drops. So what part did China play? Finally, on Tuesday, 3 Chinese banking and payment industry groups issued a statement warning financial institutions not to offer clients any services involving cryptocurrency, including registration, trading, clearing, and settlement. Recently, cryptocurrency prices have skyrocketed and plummeted, and speculative trading of cryptocurrency has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order, they said in a statement. China has already banned crypto exchanges and ICOs, but has not barred individuals from holding cryptocurrency. So will crypto go back up? Peter Sine, founder of BottlePay, a Bitcoin-based global payments app, said he's undeterred by the recent crash. Of course he's undeterred. It's his entire business model. For those of us in the space are battle-hardened to these kinds of events. We will continue forward building value into the burgeoning protocols, he told the Post. When zooming out of the charts, these intraday repricing events are hardly recognizable. It's best to look at the market with a long-term lens. Well, we just looked at it with a long-term lens, and it looks like a huge movement down, everyone, reminiscent of what happened in 2017. Now, there's more institutional money in the sector now than there was in the past, but does this just mean more Bitcoin is going to be flowing into the hands of the institutions? It's not going to be the individual. It's the kind of goal of it in the long term, the original white paper goal of freeing people from the fiat trap. Will that just disappear? So, technical analyst at stockcharts.com added that a rapid recovery is possible, but the overall upside potential is limited and the downside risk is huge. The saying, never catch a falling knife, seems very appropriate, as it is raining knives in the crypto space at the moment. Kathy Wood, founder of ARK Investment Management LLC, believes Bitcoin will hit $500,000. We go through soul-searching times like this and scrape the models, and yes, our conviction is as high as it has been, Wood said on Bloomberg TV. She describes today's crash as a capitulation phase. You never know how low a low is when a market gets very emotional, she said. We were looking at all the indicators this morning. They're all suggesting that we're in a capitulation phase, which is a really great time to buy, no matter what the asset is. Billionaire Mike Novogratz, the founder of cryptocurrency investment firm Galaxy Digital, said, "We will pump again once the selling is finished." Well, okay. And these are the Bitcoin prices here, and I will just update there we go. We're at 35,776 USD right now at the time of recording. So that's not the only thing that has occurred, everyone. There was a Coinbase outage, Coinbase outages during the cryptocurrency volatility. I mean, I was watching it, it was just going crazy. So let's have a look at what Coinbase is saying here. Coinbase struggles with outages during the cryptocurrency volatility, and their share price probably isn't going to be doing that well either. Now isn't the greatest time to be a cryptocurrency trader. Coinbase suffered an hours-long outage this morning, May 19th, that hindered transactions on the exchange. The company had pinpointed the main issue and was rolling out a fix as of writing, But it also noted a separate problem with delayed Ethereum and ERC20 withdrawals due to network congestion. Outages come right as crypto traders continued a massive sell-off initially prompted by Elon Musk suspending the use of Bitcoin. And remember, with Bitcoin and Tesla, they could pick and choose what they refund you in. So you pay them $50,000 worth of Bitcoin, but Bitcoin halves and you want a refund, you'll get the Bitcoin back. But if Bitcoin doubles, you'll get $50,000 worth of USD back. There you go. They don't take any of the risk. So what's the point in using it for this? Wouldn't you flip it over to your USD and then just buy your Tesla with it so you can get that refund? Okay. Yahoo Finance noted that multiple currencies dropped by large volumes on the morning of the 19th. Well, of course, they're always going to. They're always going to. It won't be surprising if the currencies recover. However, the sell-off is a reminder that cryptocurrencies are still very volatile compared to conventional investments. Well, yeah, I mean, what's the solution or the lesson to this, everyone? This shouldn't be a surprise. It probably is a surprise to some people that were in crypto. Or maybe they were just suckered into the hype, or they weren't involved in 2017, 2018, seeing that crash, that correction from over 20,000 when it went all the way down to around 1,000. Remember that? It can happen, everyone. It can happen again. Don't think it can't. But, you know, risk is present in the crypto market. It should be well known. And I'd suggest make sure you diversify your portfolio. Don't go all in. I see these people who just go all in, or say they go all in. I think it's a bit of BS, you know, trying to pump something up and put everything in one token or one coin, hoping to make it big. Well, if you make it big, you know, make it rich, make your millions, and that's not much of a book to publish, and you're probably wouldn't have done the hard work to appreciate it as much as someone who's worked their way to building wealth, saving, and investment. So you'll probably squander it anyway. What do you reckon? So there we have it, guys. That would be my suggestion. There really are no surprises here in the crypto space. You should make sure you've got a diversity of investments, so you're not going to be hammered by one big hit. And when I say diversity, I mean not just different coins. I mean completely different asset classes, crypto, out of crypto. As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. You can use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you in the next episode. Bye for now.